Good morning, ladies and gentlemen, and welcome to the show. Today is Thursday, the 5th of December, 2019. And, let me turn the charts on right here and let's talk about this story. The Saudis are threatening to boost production if oil producers don't comply with output curbs by OPEC. I'm going to tell you why this story is important is the world uses a very specific amount of oil every day. Now, if you produce a little bit more than that, the price can drop significantly. If you produce a little bit less than the amount that they use every day, the price can go up. And if Saudi basically, it's like a knob, very similar to a knob on an air conditioner or on a furnace. That's how it works, depending on how much. And they control this price, by the amount of oil they produce. So, if the Saudis boost production, they can significantly drop the price of this oil, and this affects the entire rest of the economy because this is an oil-based economy. Almost everything, actually everything. You go to the grocery store, everything you see in there has got oil in some way in it, whether it was delivered or the packaging might have oil used to produce petroleum products used in almost everything. And if they'd not used, even if you got an item that's got no petroleum product in it, still it takes petroleum to get it to the store, and shipping, and to ship it wherever you're at. So if the Saudis boost production, they can quite seriously, it says that it says they are threatening to boost oil production and unilaterally flood the market with oil if the OPEC nations continue to defy the group's output curbs. And evidently they want the oil price to go up, or they're threatening to drive the oil price down. So we could see a roller coaster here in oil prices if that happens. Let's get in there and let's take a look now at the silver price today. And just in the last few minutes, it started to turn back up a little bit again. You see that little swerve on the end of the green there? It's up 7 cents, $16.89 today. It looks like we seen that big drop in price, but it looks like it's halfway back up that big drop in price we saw. So it's climbing back up again. It's climbing back up out of the pit. Let's take a look at gold today. It's up $2. Now, gold is right in its range, $14.76 today for gold. Let's take a look now at cryptocurrencies and see what they're doing. We're seeing the price go up a little bit on cryptocurrency now, but it's not went up very much. It's staying in and around that 200 billion total market capital range at 199.7 billion, with a Bitcoin dominance of 67.1%. Bitcoin's going sideways. It's been going sideways for quite a while, Bitcoin and the cryptocurrencies. They're getting ready for a move, guys. Thing is I can't figure out which way they're going to move, but they're getting ready for a move. And I think it's going to be a substantial move. If they do go to the downside, they got a solid floor at 6,500 for Bitcoin. A really, really solid resistance they're going to run into at 6,500. Upside potential for cryptocurrencies, basically the sky's the limit. They could go up, they could bust straight past that 20,000 at the old mark they set, if they really get a charge behind them and institutional investors start to really pile in and stuff, could be amazing. Let's take a look now at the Dow Jones Industrial Average for today. And we were on the plus side earlier this morning. See the 5-day, we were on the plus side earlier this morning. Now we're on the negative side. 6 points on the negative side. The market, now we're back on the plus side again. 1 point. So we're riding the line there with the Dow, My tendency is to think that the stock markets are going to not fall until we're into the new year, And then it depends. Everything depends now on the Fed. The Fed totally controls this market. And they've been pumping liquidity into it, and that's why it's going up right now. But, the Fed has said, basically, that they're not going to lower interest rates. They're on hold, They want to keep this market from falling. They're going to have to start lowering interest rates again, That's definitely for sure. And they're going to have to keep pumping the liquidity in. They're going to have to keep supporting the repo market. They're going to have to keep buying bonds. They're going to have to keep doing whatever they have to do. Mario Draghi, he had it right when he said, we'll do whatever it takes, And the central banks are actually in that position, and the stock market knows that they got their back. Basically, if it does fall, it's only going to be a temporary thing because the Fed and the central banks will rush back in to support the markets. Let's take a look now at crude oil, $58.90. I just want to talk a little bit more about if it falls, if the stock market falls. There's so much pressure on the stock market now because it's went up so high. If it does fall, it could fall rather significantly and very quickly before the Fed could really react because of these trading bots. And these computers are what does all the trading nowadays on the markets, And so the markets can move so fast, they can move faster than a Fed reaction. But the Fed ultimately, if the markets go down too low, they're going to come in with support. It's as simple as that. And that support, is going to change everything. Because we're headed for an inflationary collapse, not a deflationary collapse. And the reason why it's going to be inflation is the reaction by the central banks. They're going to do whatever it takes. And ultimately, in the end, they got this goal, see, of 2% inflation. Ultimately, in the end, inflation's going to run away from their goal. This is the way it always goes. Fiat currencies always go down to zero in the end. Let's take a look at U.S. Treasuries now, see what they're doing. We're looking at a mixed bag. Short end of the yield curve, the yields are falling, and on the long end, they're rising. But it's not real big. It's not big time, especially on the short end of the yield curve. Longer end of the yield curve, we do have a fairly significant rise in around the 10-year and 7-year, 3.8 basis points. We're looking at 1.81 on the U.S. 10-year and 1.26 on the U.S. 30-year today. Now let's get in there and take a look at what the dollar's doing today. 97.42 on the U.S. dollar index, and it's been falling. The dollar's been starting to slide the last couple days. I've noticed it. It's early days yet, but the dollar's been losing some steam over the last couple days, and it looks like it's losing steam today. If it keeps losing steam like that, gold and silver is going to catch a bid, if the dollar keeps losing steam. And I think cryptocurrency is starting to move with gold and silver, basically, and I think it'll start catching a bid, too, from. The thing about it, if cryptocurrency starts to catch a real good bid, it brings an awful lot more interest back in, You got to take that into consideration. Now, this is something I wanted to talk about, and this is just a start. And when they start something, generally they keep it going and make it bigger and bigger. First few banks in Germany now are starting to charge you on savings. 0.5 percentage point for your savings in the bank. And they don't ask, they never ask you, can we do this? Or ask the people, can we do this? They just do it. So they've imposed 0.5 percentage of interest on all of their accounts. And I think one of these banks, I think it's retroactive. I think they're just chopping the half of that. That's a haircut. I guess it says another bank called Chris Park Stendal on the east of the country has a similar policy for clients who have no other relationship with the bank. In other words, they just got a savings account. And a third bank, Frankfurter Volksbank, is one of the country's largest competitive traders. It's considering going even further and charging some new customers 0.55% for their deposits. So it's a little bit more than a half of a percentage point. So they're charging you to hold your money in the bank. It's the first bank starting to do it. It'll spread. You know, they always start slow, half a percentage point. Later, a year from now or 2 years from now, they raise it to a whole percentage point. Then later, they raise it to 2 percentage points, and then 5 percentage points, and then 10. They just keep going. You know, that's once they get the floodgate open, there's no shutting it. But the first banks are starting now, the German banks. Anyway, listen, thank you guys for listening to this market report. Like and subscribe. Give me a thumbs up, and we'll catch you guys in the next show. Bye-bye.